Hello everyone, a very warm welcome to this session. I hope I'm properly audible and visible. Please do let me know in the chat box if I'm properly audible and visible. And I welcome you all to this session. Here we are discussing. This is the special descriptive series for the RBI Grade B 2026. Many of you might be preparing really well as far as your exam is concerned, but many a times the descriptive part is something that you might be lagging. Okay, so to help you out with in that regard, we have come up with this wonderful series. Okay, you have already seen the sessions with respect to management, ESI, and finance reports. Now we are with the session with respect to the finance static. All right, there are some questions that come in the FM paper as far as the component of finance is concerned from the static part. So we'll be discussing which kind of questions can appear in the exam and how can you actually approach those questions. And these sessions I hope are going to help you out in a very good manner as far as these specific kind of questions and addressing them is concerned. Okay, so without further ado, let us quickly begin in this session, and all of you can please let me know if I'm properly audible and visible, right? Yeah, you can tell me in the chat box. So before moving ahead, let me just tell you that EduTap has come up with this wonderful guidebook. If you have not referred properly with respect to the previous year questions, so this guidebook provides you all the access to all of those previous year questions since 2019, right? Also, you can go through what are the important topics from which different kinds of questions can be asked, and actually you can make use of this guidebook properly. You can download it by clicking the link given in the description of this particular video. Okay, moving ahead, as we know, this was the schedule with respect to the special descriptive series. Every weekly basis, these sessions with respect to the descriptive paper as far as the FM paper is concerned, and also the ESI paper, right? We are conducting these sessions. As you know, for management, these sessions become really important because management, the questions with respect to management are pretty straightforward most of the time, and you just have to know the nag of, you just have to have an idea of how to approach the descriptive questions, right? So that is what we are trying to do over here, starting with management, and then ESI and finance related current affairs was something that was discussed, and now today we'll be discussing finance static, and this is part one of this particular session, right? And this thing will be repeated, and here you will be getting very good idea and knowledge with respect to how to approach these descriptive questions. And I would like to mention and tell all the people who are watching this session to please do participate and be part of this particular session, where we will be answering a few descriptive questions and trying to have a look at which kind of questions were asked in the exam and what can you expect as we move ahead. Here is the first question in front of you, my dear friends, and it is open to you so as to answer this particular question. What is this question? What is a derivative contract? Explain forward future option contract. Okay, so this was asked during the 2007-14 part of the RBI examinations. Although might be that this was asked too at a time which was too early, but yeah, what we can learn from this particular question is that this is a very important topic for sure. Okay, so this was asked for 15 marks, 600 words. Obviously you have the chance of choosing from the 15-mark questions, but yeah, this is a pretty straightforward question and you can answer in a very good manner. Okay, so I would like to request everyone watching this session, please keep letting me know in the chat box what can be a proper answer to this question. Okay, what is this question all about? Let us just go ahead and try to brainstorm things over here. What is derivative contract? First of all, this is the question. So whenever you approach a question, descriptive question, what should go in your mind? Okay, what should be there in your mind? How should the brainstorming part, because even in the actual exam, it is, of course, you're prepared. Even if you are prepared really well with that particular question, you should know what the question is actually about. Okay, many a times we just read the question in a hurry and then we answer something else. I have spoken to so many aspirants and even toppers in these regulatory bodies, and they say this is one issue many a times they face. Okay, so please read the question very properly. This is the first thing that you have to do, right? What is that? Read question properly and try to have a look what is that the question is actually asking you. Are there any questions which can be divided into some micro questions? Okay, I would just like to ask all of you, are there any micro questions in this particular question? You can please let me know in the chat box, whoever is watching this session. This is a firstly, as I told you, pretty straightforward, but yeah, are there any micro question? That is something that you have to identify. If at all there are any micro questions, you will have to address each of these micro questions. Many a times we feel, array, in the descriptive I have been not been able to score really well. I have given phase to many times, but still I have not been able to score really well. What is the main issue, right? So the main issue might be that you are missing out on some of the micro questions. So start from here. Please tell me in the chat box, are there any micro questions and how many micro questions are there as far as this entire question is concerned? Okay, once you have identified what are the micro questions, what you have to do is address each of those micro questions and have in the initial part you just need to frame what kind of an answer you can give. Okay, this will be very quick if you have already practiced, and that is what we are trying with these sessions, that you practice really well as far as the descriptive part is concerned. So if you have practiced, the brainstorming and the answer framing part would be really quick. If not, it will take a lot of time, of course, but yeah, we do have to give time because there might be questions which you might not have much idea about, but you do have to frame the answer for that right then and there. Okay, so here what we have to do, we just have to see what are the micro questions, address each of the micro questions. Okay, each of the micro questions are to be addressed. This is one thing. So if we see this question, we have around two micro questions. The first part is what is derivative contract, isn't it? So that is the first part, and then the second part here is explain forward future option contract. That is where it is for 15 marks. Okay, so you can just see that there are two parts that you have to answer. Now coming to the structure of this particular answer, how should the structure be? I hope you know that there should definitely be three parts in this particular answer. What are those three parts? Number one being, you should definitely give a proper introduction. Okay, the introduction, what are the features that the introduction should actually consist of? Okay, how should an introduction be planned out to be given as far as the actual exam is concerned? If you have any idea, please keep letting me know in the chat box. This is a session where we have to interact, and it is a brainstorming thing initially, and then I'll also show you the model answer for this, don't worry. But yeah, let's brainstorm and try to think. Till now you must have prepared a whole lot, but are you able to answer the question? Let's say this is the exam, how will you answer it? Okay, so here we have an intro part which you will have to definitely give. Okay, what will be there in the introduction of this particular answer? Okay, please tell me. Apart from that, there should be the other part which is the body, and the third one is the what? Conclusion, isn't it? So how should you start the introduction for this particular question? Okay, it is again a straightforward question. It says what is derivative contract. So please start the introduction by directly addressing the question that is asked in this particular over here. Okay, just think of it in this manner. Let's say you asked a person what's your name, and then you are telling, okay, my name was kept by my Masi, and then this happened, and then they changed this name, and now it is this. Okay, is that the right answer? That's a straight question. What is your name? So you will just answer, this is my name, and then give the rest of the details. So first of all, address whatever is asked. So here you will have to mention the definition of derivative as far as this question is concerned. So how will you mention the definition of derivative? Let me tell you, as far as finance is concerned, and for that sake even in management, the FM paper, and also of course in ESI, you should see that when you are mentioning something, there should definitely be some keywords. If you're talking about derivative, okay, you should definitely have some keywords over there. Okay, so as far as derivative is concerned, the name itself says that it is something which derives something from something else. Okay, so derivative, what can we say? You can call it a financial contract, you can call it a financial security. Okay, right, this is one thing for sure. In the definition you will write. Now what is the main keyword that should be there over here? Can anyone tell me? It is a financial contract. It is a financial security. Okay, I agree with that. What is the main keyword that should definitely be there as far as a derivative contract is concerned? So here you definitely should have this thing, whose value, isn't it, depends on what? Who will tell me? On an underlying asset. Okay, so this is a very important keyword that you should definitely have in this answer. If this underlying asset part is not there, of course you are not going in the right direction, and the evaluator will understand that you do not have the basics. Okay, so there are certain keywords which are totally I would say you cannot compromise on these keywords. They should definitely be there. So that will, you will learn about them only once you have actually understood the concept really well, and then you are answering the question. So when we are answering about a derivative, it is a financial contract, financial security, yes, for sure, whose value depends on an underlying asset. This is the first line that should be there. Of course, you may frame the definition in a different manner, grammar might be different, but you should definitely have these keywords, that it is a financial contract whose value depends on an underlying asset. Is that clear? This is the first part done, where we have started the answer. Okay, now you could go ahead and tell, because what you have to answer as far as the rest of the part of the question is concerned. Now let me tell you that the introduction has to be concise. Okay, it should not be that you are writing a whole lot of sentences, a whole lot of things in the introduction. Okay, introduction is like when somebody asks you introduce yourself, it should be not very short, not very long, it should be brief. Okay, brief, or the right word as far as answer writing is concerned, it is called concise. Okay, concise in the sense it should cover things as asked in the question, but it should not be really long that the introduction is taking up all of the space as far as the designated for that particular answer is concerned. Now what should be the parameter? You should go conciseness in the sense it should be around 10 to 12% of the word limit that you have. It doesn't mean that you'll sit and keep counting the words, but yeah, by doing certain practice on this, you will definitely be able to identify that if I'm typing this much, yeah, this is uh, actually the number of words that I need in this introduction. So here we have 600 words, so that means you should have the introduction which is around 60 to 70 words. That's it, not more than that. Okay, so you started with this introduction, so you said yeah, this is the definition for derivative. Now what should be the next thing? You should also mention that, because the question itself says that there are different kinds. Okay, so the derivative contract, its value depends upon an underlying asset. Okay, if possible you can mention in short the underlying asset, which can be, okay, it can be various things. It can be a commodity, it can be a financial index. Okay, it can be many things, right? You can mention all of them, like it can be a currency, you can mention 3-4 of them, underlying asset, like something like that. Then the next thing that you need to approach over here is what is asked in the question itself. Okay, so you can just mention that there are various types of these derivatives. Okay, and then you can just mention that forward, futures, right, options, can also mention about swaps. Okay, so these are the types of the derivatives that are there. Okay, now that you have mentioned all of these things, okay, you can go ahead and mention a few features of these derivatives. Of course, the derivatives are used mostly for what? In the intro itself you can just mention what is the utility of these derivatives. These derivatives are used for the purposes of hedging, also speculation, and earning profit from the same. Okay, so you can mention something like this. Many use it for arbitrage also. Now are you able to see that we are mentioning keywords in the introduction? So of course this is technical, you need to know the technical terms and the keywords for sure. So this is how you will just begin the answer. You can go for these mentioning these things, right? If of course here it is for 600 words, you can mention some news on that or some fact also, but yeah, these things are definitely to be there, should be there in the introduction. Now coming to the body part, what are you going to mention in the body part? Okay, so you will be describing whatever you have actually mentioned over here. I hope the intro part is very clear. Okay, now coming to the body part, what should be there? First of all, you cannot directly go ahead and start describing about the types of the derivative. You will have to mention a few more things about the derivative. Okay, so what can you mention as far as the derivative is concerned? The best way to describe, tell me what can be the best way to describe about derivative is. Okay, can you just tell me what can be the best way to describe about derivative? Of course, you can go for the standard definitions. You can go for the standard, these are the features. Now that we have spoken about derivative, the features of the derivatives are this and this, it is used for this and this, these are the types. Of course, fine. What you can quickly pick, what you can mention again, add a fourth thing in the answer, sorry, introduction, is that you can go for an example. Okay, just give an example. Let's say somebody wants to buy some foreign currency. Ram wants to buy foreign currency from David. Okay, or you can go for any contemporary example. Of course, you will get it from the current affairs, but you can mention an example like this also, that Ram wants to buy currency, foreign currency. Then he actually approaches David directly. Okay, so in that case, they go for a contract, and according to the contract, in future, Ram is going to buy those foreign currency. Simple. Okay, so this is an example for a forward contract. Okay, now if this thing happens through a stock exchange, it will be called what? Who will tell me? If the same process, Ram acquiring currency, buying currency from David, let's say, if it happens through a stock exchange, then what is that particular process? What is that particular type of derivative contract called? Please keep interacting in the chat box. Whatever you know, right? You don't know. This is something where we can interact, and then that is why this session is live. Otherwise, we could have done it in a recorded manner, right? So please interact in the chat box. Please let me know. Now, if this is happening, if they're directly approaching each other, then that would be a forward contract. I already told you. If this is happening through a stock exchange, what will that be called? Okay, yes, if you are saying futures, that is the right answer. Okay, you just said, okay, David and Ram, if they had done this through the stock exchange, that would be called futures, right? Now, if at all David finds that, okay, or we can say Ram finds that he is buying from David at a cost of, let's say, 80 rupees per dollar, but in the market he is able to buy the same at 70 rupees. So what can Ram do? Right, in such a case, futures and forwards are actually obligations. You definitely have to, you have done a contract, you will have to fulfill it. But options is something which gives you an option. It converts the obligation into a right. Okay, now Ram can actually, if he has bought an option, because he is buying, so he has to buy a call option. If he has bought an option, he can go for buying from the market. Okay, just cancel the contract and then go for buying from the market at the day maturity date. Okay, so you can just mention in the body related to this. In this manner, you can just bring up this example and mention all the kinds of the derivative contracts. Okay, so here you have mentioned these. Then you can also mention some of the characteristics, right? Characteristics of the derivative contract, like you can also tell about that a derivative contract, actually its value depends upon an underlying asset. You have already mentioned this. This contract, the requirement with respect to the contract is that there is no initial, no or very less initial investment that is required, and such a contract is actually settled at a future date. Okay, a few features that you could mention, and then you could move into the go into the conclusion. Okay, so in the conclusion part, what would you mention? I hope you have understood that in this way you can mention things in the body part. Okay, in the conclusion part, what are you going to mention? Can you just try to tell? So obviously in the conclusion part, you will have to tell the utility of the derivative. The conclusion should be in an optimistic manner. Okay, right? In India, of course, there might be, you can tell what is the scenario as far as derivatives in India is concerned in the conclusion, and also you can go for telling that derivatives are utilized in this and this manner. Okay, how the derivatives are utilized? Derivatives help in the hedging, for the hedging purposes. They help for speculation, for with respect to speculatory purposes, and also for people who go for arbitrage. Okay, so the conclusion should actually give a synthesis of whatever is being discussed in the particular answer. So in this way, these and different kinds of derivatives actually help in providing the different facilities with respect to the features of these derivatives are concerned. Also, one thing that I forgot to mention, in the body you definitely have to be very specific with the definition of forward, future and option. Once you have explained it through the example, then give a definition of forward, futures and options. So if we talk about forward, again go for the keywords, right? What is forward? Same thing what you mentioned as far as the derivative contract, the definition of derivative contract is concerned. What did you mention? You said that it is a financial contract. Okay, financial contract whose value depends on what? Please tell me, any of you who can tell me its value depends upon what? Its value depends upon a underlying asset, isn't it? Now, when you are defining forward contract, then you should be very specific that forward contract is actually a customized contract. Okay, so you will add the word customized financial contract, so that would be forward. And the forward contract actually happens over the counter, wherein the parties are directly in contact with each other. They are not doing going for this contract through any stock exchange. Okay, so that needs to be mentioned. Apart from that, if we talk about futures contract, there should be another keyword over here. What is that? You should definitely mention that a futures contract is a standardized which cannot be changed. Okay, once you have gone into the contract, a forward contract you can make variations as per both the parties, but futures contract cannot, you cannot make any variations, you cannot make any changes over here. It is a standardized financial contract. Okay, and this is exchange traded, which means this happens over the exchange. Okay, now what about an option? Option actually provides a right to buy or sell, isn't it? Buy or sell to the buyer of the option instead of an obligation. Okay, instead of obligation, right? So this is how you can answer this particular question. You have a lot of points, isn't it? In this way you can also add a few examples. Now let me show you. And yeah, I would like to ask all of you one question. Okay, I have explained all of these things, fine. How can you do all of these during the exam? Is it that you will keep typing and thoughts will flow and then you will be able to properly have a good answer? I mean, the answer would be the most perfect one. That would happen if you have practiced a whole lot, for sure. If you haven't practiced that much and there is a new kind of a question, you know the answer for it, but you need some time to frame the structure of it, then my suggestion, right? If you would like to answer, how are you going to do that at the time of the exam? You can tell me in the chat box. My suggestion is go for a mind map. Okay, so mind map definitely you also get along when you are giving this FM paper, you get a sheet of paper. Okay, in that sheet of paper, what you can do is don't go for answering the entire question, but when you are writing with the hand in a handwritten manner, what you can do, you just mark the center. What are you going to write? Okay, what are the things that you have to mention in the answer? You can just go for a quick framework. Okay, draw a quick mind map so that you are able to answer very quickly. Just type, you just have to type after that. Okay, what you have done over here, derivatives, you have just written contract derived from underlying asset, the value of the contract derived from the underlying asset. Okay, a financial security whose value is derived from an underlying asset. Quickly you have written this. Then what is the other part that you need to mention in the answer? Just mark it in the paper itself. Underlying asset, you will have to you will be mentioning what kind of underlying asset: stock, bonds, commodities, currency, interest rates, market indices. Already I have told you about this. this. Now you will move towards describing the uses of the derivatives, like you can go for hedging, speculation, and then leverage. Okay, apart from this, as I already told you, that the value of the derivative depends upon the value of the underlying asset. Now moving ahead and talking about the types of derivative contracts, you will talk about the futures, right? You'll just write, I'll then mention in the body about the futures, then forwards, and then options. In the futures, you will mention it is a standardized contract traded on the exchanges, right? Obligation to buy or sell at a future date is there as far as the futures is concerned. Talking about the forward contract, it is a customized contract and it is traded over the counter. Okay, there is higher counterparty risk because the parties are directly in contact with each other. There is no stock exchange that is overseeing things over here. We do not have CCIL, also no clearing houses, nothing when the stock exchange is not present as far as that particular contract is concerned. Apart from that, going for options, we would just mention that options actually convert the obligation that is entailed with respect to future and forward contract into a right, okay, right to buy or sell. Yes, Utsav, yes, I hope you are able to understand. You can please keep letting me know in the chat box. Welcome to the session, Utsav, and others also, please, you can participate. Okay, in this manner, you can just make a mind map before answering the question. Of course, there might not be much time, but making a mind map would actually solve your problem, and you could quickly just go and you just have to go and type the points that you have written quickly while making the mind map. Is that clear? So options, you will write the definition, right? And you can in this add a few examples if you want. Now apart from that, going for the conclusion, you may mention a market where investors come to exchange their risk in the global economy with divergent risk exposures. These derivative markets and contracts actually play a very good role so as to reduce the risk with respect to various transactions. Let's say there is a transaction, as I mentioned, that Ram has to buy dollars 6 months from now. Okay, so the cost of dollar presently is 80, let's say, okay, or as we have seen is going for 100, but 6 months from now, if the cost goes for 120, what is Ram going to do? Okay, he has to pay a whole lot. So he can just go for a derivative or contract or a forward contract with, let's say, David, right, or any bank or something, and then he can just get the value of the dollar fixed. Let's say he has got the value of the dollar fixed to around 105. Okay, so the market rate after 6 months might be 120, but he's just paying 105 because he actually went for a contract. Isn't it something that is actually reducing the risk? Okay, so you have to understand the basic concept and then accordingly mention things in the answer. Is that clear? So that was one answer that we did till now, and I hope things are very clear here. I went too deep into the answer just so as to give you an idea of what are you going to do in the actual exam. Okay, have you been able to understand? Okay, here is the actual answer, the same thing that I mentioned. Derivative itself is a contract between two or more parties. Derivative derives its value from the underlying asset, as I mentioned. Most common underlying assets are stocks, bonds, commodities, currency, interest rates, market indices, as I already mentioned to you. These are commonly purchased through brokerages and everything, right? The same thing. And then you can start mentioning here. The body starts here till here. You have the introduction, wherein a very simple introduction. You can just mention a few facts if you remember from the finance current affairs, but apart from that, this is good. Moving into the body part, you have different types of derivatives are there. Futures, you will definitely have to mention these are an agreement between two parties where purchase and all of these things are happening, and these are standardized contracts. Okay, very clearly you will have to mention that. Okay, and parties involved over here are obliged to fulfill the commitment. You can also give an example like I have given over here. CME Group of the United States top derivative exchanges has launched a nature-based global emissions offset futures contract. Okay, you can mention some examples also. That will of course increase the you may get extra marks for mentioning some examples. So you can just keep adding those examples from the current affairs. Now moving ahead, talking about forward. Forward is which kind of a contract? It is a customized contract and over the counter contract. Okay, options actually converts what provides right to buy or sell with respect to an underlying asset. Okay, the specified price at during a specified period of time. Okay, all of these things. And finally, you can mention derivatives market where investors come to exchange their risks, right? Divergent risk exposures are there, and this helps them to actually cope up with the rapid price fluctuations and negative events. Okay, so that was your answer. Now moving to the next one. See this question. Yes, I know This might be something that is a little deep and might be a slightly difficult one, but yeah, you should be prepared for it. What is book building? Okay, heard about it. Explain briefly the framework of book building method of the issue of capital. Okay, what that means what are the different steps that you are going to follow as far as book building process is concerned. So of course, you know what are you going to do over here. You will have to give the answer with respect to book building. Okay, so let us quickly brainstorm and try to answer what this book building process is all about. Do you have an idea what book building process is? What would you mention in the introduction of this particular answer? Can anyone tell me in the chat box? Okay, so of course, as you know, there must be three parts for sure in the answer. First things first, you should have the introduction, then body, and then the conclusion. Now talking about the introduction part, what would you mention in the introduction? Now tell me, it is up to all of you people, right? We have seen the previous question. Can you tell me what should be the kind of introduction that you will mention? Are you going to go for quickly initially give a fact with respect to book building? Are you just directly you will go and start giving a definition of book building? Okay, can you just pick? Okay, option A would be provide a definition. Option B, go for a fact. Okay, option C, just mention the background of book building. Tell me. Now I've made things easier for you. You can just choose from option A, B, C. Okay, please tell me quickly in the chat box what are you going to do as far as this question is concerned. Before that, also you should see that are there any micro questions in this particular question. If you see, the first part is what is book building. Then we have explain briefly the framework of book building method of issue of capital. Okay, so how many micro questions are there over here? Many a times, even though there might it might seem that there are two micro questions, but there might be more than that. But here you have how many micro questions? Please tell me in the chat box. Okay, if you are able to understand from the previous question, just tell me how many micro questions are there. That also you can let me know, right? So if we see over here, what is book building? This is one question, and then the framework or the steps with respect to book building process is something that is to be mentioned. Okay, so what is this book building? Book building process is a process of issuing issuing shares, right? Or you can say equity, wherein what is going to happen? Bidding within a range mostly of the price of equity instruments takes place, isn't it? And what is the result of it? Which results in sorry for the handwriting, results in deciding a cutoff price at which the instruments would be allotted. So what does this definition actually give an idea? That the equity, it is a process of issuing equity wherein bidding happens, okay, within a range. Let's say what should be the price of the shares. It is between the company says along with the lead merchant banker that it should be between 120 and 100. So people will give their bids. Okay, let's say most of the people have bid for 110. Okay, so this would be the most appropriate price for this particular equity instrument. So that price would be selected and all of the shares would be issued at that particular price. Okay, so what you can do over here, as I gave an example to you, you can also mention the example but in the body. Okay, you have mentioned what book building process is. Then you're going for mentioning about the steps that are taken for this process. Okay, so also before moving into the step, the flow of the answer should be very good. Okay, although flow should be good, you should also see that it is concise enough. So here you will also mention what is the utility of book building, even though it is not asked. Sir पूछा तो नहीं है book utility क्यों बताएं, but even though it is not asked, you please mention what is the utility in very short terms, because of course the entire purpose of all of these questions is that you understand the utility, the aim, and then you are able to use it practically, of course. So here, book building process, what is the utility of it? It helps in what? Price discovery, isn't it? Price discovery. It makes the process of issuing capital easy, or you can say simple. There are various steps taken, you can mention that, as far as the framework is concerned, taken for this. Okay, and we will see that in the evaluator knows that you're going to mention the steps, you have given the utility, you have also mentioned the definition, which is something that the question entirely asks for, and you have mentioned all of that in the introduction, that you're going to give you have given an idea that you're going to mention these things in the body of the answer. So you can move ahead and then start describing in the body of the answer that, yeah, book building process, if you're talking about book building process. So what happens in this book building process, right? You can just mention very briefly again. You can move ahead and tell that as we can see, right, book building process, there is bidding taking place in the book building process, which makes issuing capital easier or simpler. Then you can go for mentioning an example over here, because obviously just having a look at all of the definition and everything might not give an idea that whether you know about the topic or not. Just give an example that there's a range between 120 and 100 people have done the bidding, and the most appropriate, the most of the people have bid at 110. So this is the price that is to be taken as cutoff price, and all of the equity instruments would be available at this particular price. Okay, so you're giving an example. So that's the next part. Okay, you have very clearly explained what this book building process is all about. What else can be mentioned in the body of this answer? Can anyone tell me very quickly? Can you just try to tell me what else can be mentioned in the body of this answer? Okay, sir, whatever was asked, almost everything we have mentioned over here. So what else can we mention, right? So you can very briefly mention the features, and then what has been asked over here, framework, okay, of the book building method has been asked. That means you will have to mention the steps by which the book building process is actually carried forward. Okay, first of all, an investment banker is someone who is appointed, right? And then the process with respect to going for the bidding, it starts. Okay, the bidding range is decided, the bidding process begins, and then the cutoff price is decided, and then the equity instruments are actually allocated, and in this manner the book building process goes ahead. And then once this thing is very clear, the conclusion will be very natural. Okay, conclusion would be very natural. So as it is seen that the book building process incorporates the bidding with respect to the price of the capital that is being issued, and that actually helps in simplifying the process of issuing capital. And apart from that, it also helps in price discovery. The price with of the particular equity instruments is also very clearly understood. The best price is decided. Okay, so this is a idea with respect to how you can answer this particular question. Again, this was for 15 marks, 600 words. Let me show you the mind map with respect to the same. Okay, so book building process is price discovery mechanism with respect to IPOs mainly, right? What is this IPO? It is the initial public offering. So you will first of all mention the definition, that it is investors bid within a price range, and then the price at which the last share can be sold is the issue or the cutoff price. This is the definition. Now you will mention that this is not a fixed pricing thing. You can also mention the background of it, that we have mostly moved towards book building process as far as the latest issue of capital is concerned, okay, issue of the shares and other instruments, equity instruments is concerned. You can give an example that the range with respect to fixing the price of equity instrument is 100 to 120 people. Most of them have bid at 115, so that is to be taken as the cutoff price. Now talking about the key benefits, it helps in price and demand discovery also. Yeah, one more important benefit of this is that through book building process, even before the actual IPO is out into the public, we want to go for pre-booking of the equity instruments or shares. Okay, with this pre-booking, we are very sure that when the shares are moving into the market, let's say you came up with 100 shares into the market, at that time you're very sure that at least out of this, what is the requirement as far as the equity market is concerned with respect to these shares getting sold. Okay, so you are definitely sure that there is no under subscription. Okay, under subscription, which means the shares, all of the shares as far as required, okay, let's say 75%, so 75% of the shares are definitely bought by people. Okay, so that is something that is ensured. So under subscription is the risk of under subscription is reduced. Cost and time and process becomes simpler. Investors also get a fair and transparent price as they desire. Okay, most of them have bid themselves. They have decided the price within the range, of course. Then, what is the process? Appointing an investment banker, collecting all of the bids from different people, price discovery, wherein the cutoff price is decided. Then also publicizing and telling everyone that this is the price that is decided. And then final settlement, wherein the equity instruments are transferred into the demat accounts of these people and the money is collected. Is that clear? So the entire process is also given over here. And with respect to the same, we have this wonderful answer that you can see. So companies all over the world use fixed pricing or book building mechanism. Over a period of time, the fixed price mechanism has become obsolete and now we are using book building for the IPO. What is it? It is a price discovery mechanism that is used in the stock market, fixing while price securities for the first time. Okay, while coming up with the pricing securities for the first time, when shares are being offered for sale in an IPO, it can either be done at a fixed price. You can go for a fixed price, but this is the best method wherein the price is fixed as per the market. Okay, if it is not sure, the company is not sure, they will go for the book building process. It is one of the most efficient mechanisms, is something that we have mentioned, and you can also give an example as I already told you. Okay, now coming to the process itself, you can mention about the appointment of the investment banker, right? This is the lead investment banker who is appointed, and then you can go ahead and mention a few more points with respect to the same. Propose a price band. They will decide why is this investment banker required. They will decide a price band along with the specific company owner. Okay, then the bids are collected on that. Right, there are various sub agents to tap on into the network, and large group of individuals actually give the bids, and based upon that the price is decided, and then the cutoff price finally is also decided. Okay, then that is publicized all over the world, that the company make the public details of the details of the bids are made public, and the lead investment bankers duty is to run the advertisements, okay, with respect to the same, so that there is no one who is having any issue with respect to the same. Settlement happens wherein at the specific decided price, the shares of the equity instruments are allotted. Okay, so this is what is the process. And finally, you can mention what this book building process actually helps with. Enables issuers to reap benefits arising from price and demand discovery. Aim of the process is to have issue pre-sold and preclude chances of under subscription. So you're not going for any under subscription. Okay, all of the shares are definitely subscribed to the level required. Okay, so this is what is the main aim. That was your second question and the answer. Now moving to the third and last one. What is commercial bill market? Okay, why has it not developed as a segment of the money market? Okay, RBI Grade B 2007 and 14. In between that time, this was asked 15 marks 600 words. Okay, again talking about the commercial bill market, you can just go ahead and go for the mind map in this regard, right? So what this commercial bill market is all about, first of all you should know what a commercial bill is. Okay, and also you can mention the basic legal backing of the commercial bill. Okay, Negotiated Instruments Act. From there, the proper definition of commercial bill can be given. Okay, the commercial bill actually provides, so talking about the introduction, as the question is straightforward, right? Before that, as I told you, you should also see what are the different micro questions. First micro question is commercial bill market. The what is the meaning of it is being asked. Number one, why it has not developed as a segment of the money market is something that has been asked in the second part. But means the second question might be slightly confusing. Second part, second micro question, but it just says that why this commercial bill market is not that famous. Okay, not that worthy, or not that, it is definitely worthy, but why it is not that famously part of the money market. Okay, so that is the thing. Here, talking about the introduction to this particular question, you can say commercial bill market. You can just give an introduction to that by actually what you tell me in the chat box, by actually defining what commercial bill is. Okay, and then they are asking about the commercial bill market. Okay, so yes, you will have to define, give a few features, and then go ahead and talk about its importance as far as the money market segment is concerned. Okay, so talking about the introduction over here, commercial bill actually, what can we say, it is a instrument, right? It is a short term instrument, so as to what happens as far as commercial bill is concerned. Let's say if at all there is person X who has to make a payment to Y. Okay, so in this case, what Y would do, Y has to make a payment to some Z. Okay, so instead of getting the payment from X and Y, what Y would do is issue a commercial bill and then say, okay, you can directly go and pay to Z. Okay, so these two transactions are cancelled out. X is going to pay to Z because ultimately that money has to reach Z only. Okay, so obviously the amounts are almost similar. So this is the main feature as far as the commercial bill or the bill of exchange is concerned, right? Now, what happens over here is this particular thing is utilized, and it has wide applications. Okay, what can be that wide application? Let us say there is a seller and he has sold some goods to a buyer. Okay, now what buyer is doing is saying, I cannot pay it immediately. Then the seller says, okay, fine, here is my bill, and then what I will do is I will submit the bill to a bank, right? So what will this bank do? It will take that bill and receive the money at the end, right? So what seller has done, he has issued a commercial bill or called a bill of exchange with respect to the invoice that he has created, right? And that is given to the bank. Now the bank is going to with respect to this, it can go for discounting, in the sense, if this bill is of 100 rupees, bank will give 90. Okay, I'm paying 90 immediately, and then I will collect 100 from the buyer itself. Okay, so this commercial bill thing is actually utilized as we move ahead for rediscounting. This process is called, sorry, this process is called discounting of the bill. Okay, and then it can be further taken forward, and the bank can still take that particular bill ahead and go for rediscounting. So this is what is the commercial bill market. I hope the concept is understood. Now talking about commercial bill market, you can just define it first of all, that it is a we can say instrument that helps in transferring the receivables, right, the payables, and from one particular party to another. And this is the utility of this commercial bill market is with respect to discounting of bills and rediscounting of the bills. Okay, so you can just begin in that manner. So that is what is the commercial bill market, the basic definition of it. Okay, you can begin with this. Now this commercial bill market is, since it has been mentioned that it is short term, right, it is short term in nature, so it will be part of the money market or the capital market. Tell me in the chat box, money market or capital market, it will be part of which kind of the market? So obviously, since it is a short term instrument, it should be part of what? Yes, it should be part of the money market, not the capital market. So it is part of the money market, but still it is not that famous because there are various reasons for it, and one of the biggest reason for that being that there are various other instruments. Like in the money market, we have the treasury bills, okay, Then there are like commercial paper. Okay, all of these things are there which are much more utilized in the money market, so as to go for the exchange of capital apart from the commercial bill and all. Okay, so this is something that can be mentioned. And coming to it has not developed as a segment of the money market, you will have to mention all of the different reasons for this particular thing happening. Okay, so let us quickly have a look at the mind map in this regard. Right, so you can go for a mind map like this. It is a short term, negotiable, and self liquidating instrument. Once the payments are done, the commercial bill actually liquidates itself. It is self liquidating. Risk is very low, wherein the payment definitely has to be transferred. It enhances a liability to make payments on a fixed date for with respect to particular goods. What are the features of the commercial bill? You can mention that also. The first thing is that it can be traded through rediscounting. As I told you, it can be given to a bank and then bank will discount. And that bank can give to another bank and then the bank will receive more money. Okay, so it can be traded. Second thing is the banks discount these bills and credit repayable on maturity. So banks utilize these bills further so as to get credit and money. It improves the quality of lending, liquidity and efficiency, fully secured and highly liquid. Okay, so uh, these commercial bills actually can be taken forward and then rediscounting again and again, money can be obtained in a very easy manner. The bill market is well developed abroad, okay, but in India it is very not that much developed. Okay, it did not develop in India due to cash credit system and absence of, there is no proper secondary market in this regard. So that is also a feature. Now talking about why this has not become part of the money market. So the size of the market is small. You can mention the size if you have data on that. Otherwise, you can just mention that it is small. RBI's support is limited to this particular market because, of course, even you must be knowing about which particular uh, rate, right? RBI has various interest rates at which loans are given, taken with respect to the banks, right? Do you know the most, what is, which particular interest rate is called the policy rate? Does anyone know over here which interest rate is actually called the policy rate? Any idea? At least this you should definitely be knowing. You are going into RBI, right? Policy rate किसको कहते हैं? किसी को पता है? If you have an idea, you can just tell me. So there are various interest rates, and out of all of these, there is this particular interest rate called the bank rate. Okay, so bank rate is the interest rate at which banks can take the commercial bills that they have. Okay, that is one of the asset that they can utilize, keep it as a collateral, and at bank rate they can take some loan from RBI. Okay, so that is what bank rate is all about. So you can also mention that bank rate is also not that famous because of the commercial bill market not being that much utilized in India. Okay, policy rate nahi pata hai. So policy rate, what is, yeah, very good. Repo rate is actually called the policy rate, right? So we should definitely be knowing this. Sheikh मुनीर जी, आपका आंसर एकदम सही है. वंडरफुल, थैंक यू सो मच. So policy rate. So in all of these rates, there is this another rate called the bank rate, wherein commercial bills can be taken by the bank and kept as a collateral and that. So of course, bank rate is also not that famous, and RBI has actually does not support much this commercial bill market. No ultimate source of acceptance from RBI in times of fund shortage. If at all there is any fund shortage, if the bank is actually indulging in the commercial bill market, there is not much support that RBI is going to provide with respect to any shortages that the bank is facing. While if you talk about if the bank has taken any loan or something on repo rate and other things, RBI is ready to help. But with respect to commercial bill, market related transactions, RBI is not going to help much. Okay, so of course it has, as I already mentioned, that it has withdrawn or it has very less support with respect to banks participating in this market. So obviously it won't be that famous. Then there's this institution called DHFI, which is so much involved in this particular market. It focuses more in the money market specifically. It focuses more on the call money and treasury bills, which are also part of the money market. Okay, so these instruments, you must be knowing about the various instruments of the money market. One of them is a call money and the other is a treasury bill. Okay, so call money is between which entities? Can anyone tell me? If I talk about call money, okay, call money, this here again, basically money market is like one is taking the loan and the other is giving the loan. This is the main thing. In call money, who is taking the loan, who is giving the loan? Which, what can we relate as far as call money market is concerned? Can anyone tell me? Or if you know about also the treasury bill, who issues treasury bill on behalf of whom? Okay, so these are some things that you should definitely know. These are the basic things that can be asked in your objective also. Okay, so these are more famous in comparison to the commercial bill, and so they are not that much used, right? Yes, between the banks. You very good. Munir is very wonderfully answering. Wonderful, Munir. So, yes, call money is interbank, between the banks. Okay, you should remember these key terms. If they have, there's a question in the exam, you will definitely be able to answer. Now, what about treasury bill, Munir? Okay, I think you are only answering, and others also can please participate. What about treasury bills? Who issues the treasury bill, on behalf of whom this treasury bill is issued? Please tell me in the chat box. Yes, treasury bill issued by RBI on behalf of Government of India. Wonderful. Government of India issues government securities, and this is a short term government security, and it is issued by RBI on behalf of the Government of India. What are the are there different tenures as far as the treasury bill is concerned? I'm just trying that you revise things. Are there different tenures as far as the treasury bill is concerned, right? Or are there any, is there any restriction with respect to that? Actually, there are three tenures as far as the treasury bill is concerned. So, can anyone tell me all the three tenures? How many days, and how many days? Okay, any idea? You can tell me in the chat box. So, these are the features as far as the treasury bills are concerned. You should definitely be knowing. This is where the there are questions and RBI confuses as far as phase 2 is concerned. Mainly used for foreign trade. Okay, mostly these commercial bills are used as far as foreign trade is concerned. Many bills are discounted by banks, are not genuine. Okay, so the bills are many a times we also know that many bills that are created, most of the bills are not genuine. Okay, but treasury bill is totally genuine. Con money, it is happening interbank, and so in a very genuine manner. Yes, Sumit Kumar is also answering really well. Sumit is saying that there are three tenures, sir, for the treasury bill. One is the 91 day, the other is the what, 182 days, and 274 days, isn't it? No, yes, absolutely. 365 days, okay? 364 actually, 364 days is the right thing. 90, 91, 182 and 364 days is the right thing. Okay, Munir, absolutely correct, right? So, Munir, Sumit, wonderful. So, this is how you can answer this particular question, and you should know certain facts, and this is the answer over here. As I told you, when you're talking about commercial bill, you can also mention that with respect to the act. Okay, in the question itself, if you are mentioning sorry, in the introduction itself, if you are mentioning certain important facts or the legal backing, right, the legal framework with respect to whatever question is asked, question is on, right, so that will help. Like here we have the question on commercial bill market. Of course, you have mentioned what a commercial bill is. It is a short term negotiable self liquidating instrument with low risk. It enhances the liability to make payments on a fixed date when goods are bought on credit. Now, where is the actual definition with respect to the same mentioned? It is given in the Indian Negotiable Instruments Act of 1881, wherein a bill of exchange is described as a written instrument containing unconditional orders signed by the maker, directing to pay a certain amount of money only to a particular person. Okay, so X has to pay to Y and Y has to pay to Z. Now, if Y has issued a commercial bill, then X will pay to Z directly. Okay, so that right is given. So that is something that is given over here. Array sir, we won't be able to remember this. Ab negotiable instrument act jaake padhna padega kya? No, the thing is you can just mention that. Okay, that the definition for the legal backing as far as commercial bill is in the Indian Negotiable Instruments Act 1881. At least if you mention this, that would be wonderful, because the evaluator knows that it is mentioned in this particular act. Okay, so that is the thing. You can just quickly go ahead and also mention that the commercial bill market started in India in 1970. Give a little background of it. RBI rediscounted genuine trade bills right at that time, and then this was also taken up by the banks. Now, moving ahead, what are the features of it? It is traded and rediscounting is done, that I have already mentioned. Ensures the improved quality of lending, wherein liquidity of this commercial bills is high. It is limited in India, and the reasons for that are something that we are going to state over here. Okay, as we have already mentioned that commercial bill market itself is the size of it is small. Reserve Bank does not much support this particular thing that we have mentioned, and it has set up DHFI as far as this thing is concerned to deal in the instrument and extends refinance facility to it. But still, DHFI actually takes care more with respect to the money, sorry, in the money market with respect to the treasury bills and call money and all. Okay, and this is mostly commercial bill is mostly a foreign trade related thing, right? And large portion of these discounted bills, the bills itself are not genuine. So obviously these are the things that we can say because of which the market is not that much developed. And ending with the conclusion, the system of cash credit overdraft from banks is cheaper and more convenient than bill financing. Okay, the bill financing, if you are giving a bill of 100 rupees and then you are getting 90 rupees in a discounted manner. But if you are taking a cash credit or something, you're going for overdraft on your current account or something, other overdraft related facilities are provided to it, you might get 95 or something. Okay, so here you are getting less money, so that is why this is not preferred. Also, complex and time consuming process wherein you have to give the bill, then they have to give the money, and then bank has to collect. If that does not happen, then it will be something wherein you also might be caught in a legal tussle, right? So all of these things can happen. That is why it is not that much preferred. This market was highly misused in the early 1990s by banks and finance companies, wherein fake bills and all were used. Okay, and that is why we can say not that much utilized. Okay, so in this manner you can mention the conclusion. So this is the way how you can actually answer these questions, finance static related. We have taken an idea on how to actually answer the descriptive related questions. So basically, summing up things, I can tell you that the introduction is something that should be to the point. Okay, it should be concise, not so large, 10 to 12% of the entire word limit, and it should be to the point, which is it should be totally relevant. Okay, you should not just go beating around the bush. Okay, so you should definitely go for a relevant introduction. Then the body should have a proper content, right, with respect to what is asked in the question. The structure and the flow should be absolutely right. Okay, and then you should also see whether you are answering in points or paragraph. Both might be fine, but you do not go for very large paragraphs, go for short paragraphs. But best thing would be if you go for the point wise answering. Now coming to the conclusion part, it should again, as I told you, it should be a synthesis of whatever you have answered. What does synthesis mean? Why are we not talking about summarizing things? Is that cash credit overdraft from banks, you see this is cheaper. We are mentioning this thing and supporting that commercial bill is not that much utilized. It is more convenient in comparison to bill financing, and also the process is complex and time consuming is something that we have already mentioned in the answer. So we are just summarizing, we are sort of bringing all the points and then we are just adding them up and creating a conclusion, which is something which is called synthesis. Synthesis means combine and create something new, so that is synthesis. And also it should be a solution based. Okay, positive outlook should be there as far as the conclusion is concerned, and this is how you can definitely answer these questions. Okay, so if you have any other queries or questions in your mind with respect to this thing, you can please let us know. You can drop a mail at hello@edutab.co.in, or you can also contact us on this number, so that will help you out with respect to your query. Okay, apart from that, wishing all of you all the very best for your upcoming exam, right? It is very too much round the corner, and I hope this session actually has helped you. If it did, you can let us know in the comment section, whoever is watching later on, right? And thank you so much for all the people for joining this particular session. Wishing you all the best for your exam. Okay, thanks a lot. Take care.